Good morning, Alishia. My view hasn't changed. Like I mentioned last week, we're expecting a choppy recovery. The market was up just less than 1.5% last week, and we think that when you look at just like as we saw on the graphic that you just put up there, it's been a seesaw movement over the last 3 to 4 weeks. So we think that that will probably continue for a while, even though we think as long as the stimulus plans of the government and the central bank continues with quantitative easing measures, we think that the market would recover into the first quarter of next year.
We saw on Friday the Central Bank of Nigeria actually spell out guidelines for investment into any of the 10 troubled banks. What is the market made of those suggestions, seeing that we've had now a weekend to digest it all?
Well, I think we'll continue to digest that information. Looking at the market trend last week, we saw that the banking sector was down almost 8%, largely because of major losses in Spring Bank. But overall, we've seen that cautiousness about investing in the banking sector. The local investors in general continue to wait it out to see what's going to happen. They are also constrained by liquidity as well. But the foreign investors are, I think, much bolder, and they are taking positions. I think that we'll wait to see how the market reacts to that. But in the short term, I think the view is that it's not a change that's going to take place overnight. Mm-hmm. Obviously, the focus for most investors will be the banks that were cleared by the central bank, at least in the short term. So in that regard, I think that there are definitely buying opportunities there.
Well, where there seems to be some mixed signals, and this has happened over the last couple of weeks, is when it comes to the actual nationalization of these banks moving forward. We've had now Governor Sanusi Lamido Sanusi emphasize that the Apex Bank will not be involved in any nationalization of any of the 10 troubled banks. Is that the final word right now, no matter how dire the situation actually gets?
I think he's spoken for the central bank, and that it seems to be the policy that they would like to pursue with regards to these banks. He had said long ago that the plan was not to nationalize, it's simply to put the banks under new responsible management that can take them forward, and of course to also attract new investors. So I think that is the plan long term.
Okay, if we're looking at what the market is vying for here, I mean, we've got the option of local banks buying into some of these troubled banks. We've also got the option of foreign players coming in. Is there any sentiment swaying in either direction on what the market would favor most at this stage of the game?
Not at this point. I think really everyone will just have to wait and see how things play out. The local banks in the short term, I think, might be constrained by liquidity to invest in these banks. The foreign banks obviously are much bigger and have more capacity. I mean, so definitely banks from Asia, for instance, that are looking at Nigeria as an investment opportunity, mm-hmm. are probably a lot more liquid than, say, some of the other Western banks. But at the end of the day, I think it's something that is not going to happen overnight. Over the next 12 months, perhaps, we might not even see any transaction simply because of the constraint of liquidity on the local bank fronts. But however, if the central bank moves forward with the asset management company and obviously provides a lot more liquidity to these banks, then perhaps we might see some transactions in the short term. Then, of course, to add to that, there are some banks that are looking to raise capital. So it's really a question of liquidity. Do the banks have the muscle to do these transactions now? I think right now the answer is probably no.
Okay, well, let's take our eye off the banking sector for now, Wole. I mean, looking forward, we know that of late it's been the consumer-driven stocks that have been getting a lot of attention. They've been proven to be resilient in this entire uncertain period. How are you playing some of the consumer and beverage stocks at the moment?
Well, I mean, outside the banking sector, I did mention last week about flour mills. And the market has obviously reacted to that result. The price was up 26% last week, one of the top gainers last week. And we think that there is still some way to go for flour mills. It's a company in a growth phase. I mean, regardless of how big it is right now, it's certainly looking to invest in new areas. I mean, the company has, for instance, reported that they're looking into investing in sugar. And I think there has been a track record of performance for the current management. Definitely flour mills at the current valuations, we are valuing at a forward PE of 5. We think that there's definitely an upside there. So definitely flour mills is one to look at. And like I mentioned as well last week, Benue Cement is another good stock to look for in the medium to long term.